Well, hello, everyone. Welcome to our Silicon Heartland series online. Today we have someone very famous joining us, Steve Case. Hello, Steve. How are you?
Great to be with you, Rebecca, and congratulations on the book coming out.
Oh, yeah. Thank you so much. How's your day going so far?
It's been good. I've actually been traveling. I was on a plane most of the day. I just landed. I'm in Arizona for something tomorrow. So that's my virtual background of my office in Washington, D.C. But I'm just
Oh,
in a hotel in Phoenix.
it looks good, actually. And I'm going to Phoenix next week for something, late next week. And I'm going to Austin this weekend for South by Southwest. I'm really looking forward to that.
Great.
So, yeah. So Steve and I have a few things in common. We're both authors, although I'm not a venture capitalist like Steve is, and I'm not famous like Steve is. But look, you got to start somewhere.
Well, you're a more prolific author as well. You've had far more books than I do. Double, I think.
Well, it's my fourth one, and there may yet be a fifth, but we'll see. Anyhow, we've been making the rounds with our online series. We've been to Columbus, Cleveland, Tulsa, Morgantown, Cincinnati, Louisville, Indiana, Cincinnati, Cleveland last week, and today Rise of the Rest. And this is actually going to, wrap up our Silicon Online series. We've been saving the best for last because Steve has the overview of what's happening in the Heartland and throughout the Rise of the Rest region. So as Steve just mentioned, he just gave away this little tidbit here that I've been tracking tech innovation as a journalist for more than 20 years. And this is my fourth book. So I have a global perspective, but I also have an Ohio perspective because I'm originally from Ohio. So going back to write Silicon Heartland was like a homecoming for me. All right, Steve Case, born and raised in Honolulu. How often do you get back to Honolulu, Steve?
Not too often. I was getting back more frequently than when my parents were both alive. They both passed away, and then obviously the pandemic made it a little more difficult to visit there. But I try to get back a couple times a year.
Okay, all right, that's good. So Steve is probably his most famous project success story is AOL. Co-founder of AOL back in 1985. And, it's funny because I was just cleaning some drawers in my apartment in New York City, and I found an AOL disc.
We did send out a lot of those. I think there are a lot of closets and attics.
Yeah, I wasn't sure if I should throw it out or just keep it as a souvenir.
I'd keep it as a souvenir. Why not?
Yeah, that was all about the internet generation. So, of course, Steve went on to merge AOL with Time Warner in 2000. He became chairman of the Startup America Partnership in 2011. He co-chaired the National Advisory Council on Innovation and Entrepreneurship. He's a member of the Council on Jobs and Competitiveness. And he was instrumental in passing the Jobs Act. Very, very good. All very startup-y and entrepreneurial. He's the chair of the Smithsonian Institution, and he's a graduate of Williams College. So there we go, a little bit about Steve. And a little bit about Revolution Rise of the Rest, which Steve started in 2005. Now, Revolution Rise of the Rest, there's three fund families involved. There's the Growth Fund, the Revolution Ventures, and the Rise of the Rest Seed Fund. And backing comes from a lot of big names: Jeff Bezos, Eric Schmidt, John Doerr, Ray Dalio, and Sarah Blakely. So, but today we're going to focus primarily on Rise of the Rest. And Rise of the Rest has two $150 million funds. It's invested in 200 plus companies in nearly 100 cities. And this is an interesting statistic too. I think that so much of your portfolio is going to is with diverse and women founders. So that's remarkable. Also remarkable, some of the deals that you've done, like Zipcar, Sweet Green, Clear, Clear from the airport clearances. Yeah, so he's done 8+ bus tours through inland regions that most people would consider flyover country, and done pitch events in each one of those markets. So that's just a little prelude of what we're going to be talking about today and who Steve is. So while I'm just wrapping up this intro, would you please get your questions ready and type them into the chat box, because we're going to get to the best questions, and I will be monitoring those and selecting them, and they'll be ready for Steve to answer. So one last little factoid before we move on. I think one of the reasons Steve and I are concentrated on this inland region is because it really needs a lot more venture capital. So only 10% of the VC deals and 6% of VC money go to 7 Rust Belt states. And those Rust Belt states were really hit hard when industry lost out and moved to China, and factories shut down, and GM shut down, and US Steel, and all of these industries had a devastating blow on the Great Lakes region. But today we're seeing the Great Lakes beginning to recover with a lot more venture capital investment, 63% growth over the past 10 years. And the Great Lakes now ranks 5th in the US nationwide for deals. I'll share these stats out with anybody who wants them, but I think right now we want to focus on Steve, and let's focus on Steve. Okay, so Steve, did I get anything wrong, or anything you want
No, that's correct.
to amplify?
Very thoughtful and thorough and kind introduction.
Okay, thanks. We're very happy that you're here. Look, so what do you see out there in the landscape? And what do you see for the future of tech innovation? Are you what do you think about Chat GPT? Things like AI. Is this going to make an impact nationwide? Just where do you see the future of tech innovation? This is a real broad question.
I think it's very bright. I think we've seen a lot of innovation, obviously, in the last few decades. I've been part of it with the early days of the internet, as you mentioned. But I think this next 10 or 20 years, I think it's going to be remarkable in terms of how even the internet kind of meets the real world. You start seeing an acceleration of the innovation, the disruption in sectors like healthcare and food and many other sectors. So I'm quite excited by it. I think it's going to be a little different. I think people have fully appreciated this when I talk to people. I think the whole idea of policy is going to matter more. A lot of these are regulated sectors. I think partnerships are going to be more important in these sectors, and place is going to be more important. That ties in with your book and our work on Rise the Rest. We think that some of those great partners are going to be in the heartland, and so some of the entrepreneurs that are close to those partners will be advantaged in this next kind of age of innovation. So I think it's super exciting.
Oh, yeah, I agree. So do you think Silicon Valley is going to continue to lead tech innovation globally?
Yeah, I think it will continue to lead. I just don't think it'll be as dominant. There's a lot of great things about Silicon Valley. There's a tremendous momentum there, obviously, kind of a increasing returns, network effect, network densities kicked in, a lot of capital, a lot of successful companies. So hats off to them. We've never been anti-Silicon Valley when we've talked about other cities. We basically said we think there'll be a dispersion of talent, a dispersion of capital. The innovation economy will not be dominated by a few places like a Silicon Valley or New York City, a few others. It'll be more dispersed around the country, and dozens of other cities will rise up and in the process help launch some of the great companies of tomorrow, and also in the process help lift up those communities, creating more jobs, driving more economic growth. So yeah, Silicon Valley's got a big lead. It will continue to be the leader of the pack. It will continue to be the pride of America, the envy of the world. But I think people will see a lot of other cities, and not just a few, but a few dozen emerge over the next couple of decades, which I think will be great for those cities and also great for the country.
Right. So today in tech news, it's all about the layoffs. If it's not about the layoffs, it's about Elon Musk. But what do you think about the economic impact in the tech space today? Is this really lasting? Are we going to come out of this? Is there going to be a recession? What do you think is happening with tech innovation today in tech and venture capital along with that?
Well, I think a couple of years ago, things were a little overheated. Valuations were, kind of inflated. There, we'd been a 13-year bull market, and most people only could imagine, companies going up in value. Inconceivable that it'd be flat rounds or down rounds in venture capital, parlance. As a result, people were able to raise capital relatively easily at relatively robust valuations, and we're able to hire quite aggressively. And some of the bigger players, some of the big tech companies, were quite acquisitive, acquiring lots of different companies and really scaling their employee bases quite significantly. So it's not that surprising if you look at the arc of history that there was going to be a correction. It's not that surprising that the valuations would moderate. It's therefore not that surprising that the growth people expected was slower, and therefore it's not surprising that the companies have to retrench. And as part of that, there's layoffs. So in some sense, that's predictable. I think what could happen next, again, just based on what's happened in the past, is this could actually fuel more innovation and startups, because some of the people that had been working for these big companies suddenly are free agents. And also some of the really big companies, not just in the tech world, but also in other sectors of the economy, as they pull back, they often cut or even shut down some of their internal innovation initiatives. And that creates more opportunity for the entrepreneurs challenging some of those incumbents. So it could unleash over the next decade a wave of innovation. But for sure, it's right now we're in a period where it is a little more difficult for entrepreneurs to raise capital. It is more difficult for venture capitalists to raise capital, and valuations of public companies that people thought were at least I thought was robust a couple of years ago, are still in the process of correcting. And obviously it will depend on what the Fed ends up doing with interest rates, depending on inflation, a lot of other factors. So it's hard to predict in the short run, the next 6 to 12 months, what's going to happen. I think it's a little easier to predict over the next 5 or 10 or even 15 years. You're going to see enormous innovation across many sectors of the economy, across many aspects of our lives. And it's going to advantage the disruptors that are going to take on those incumbents. I think a lot of them, and you know this because of your book, are going to be in the heartland, not just on the coast.
Right. So what do you see as some of these contributors to the heartland's rise?
Well, some of it is they've always had talent that was growing up there or going to school there, but because there wasn't a lot of opportunity there, particularly opportunity in sort of the innovation economy, the tech sector, the startup sector, a lot of people left. So as you know, there's been a kind of a massive brain drain over the last 30 or 40 years of many of these cities being even a little bit hollowed out, with people feeling like they had to go to the coast because kind of that's where the action was, in part because that's where the money was. So the talent was always there. Now some of that talent is staying, and some of that actually is boomeranging back. And we've seen that developing over the last decade. And certainly the pandemic was a tipping point, a kind of accelerator of some of that dynamic. So the talent aspect is going to be very important. We said before, the partnerships are going to be very important in an area like healthcare. It's not actually the software you write that's going to disrupt the industry or innovate in the industry. That's really the table stakes, the technology that gets you in the game. The game is going to be won or lost based on the partnerships you form around your company. And a lot of important partners in a lot of sectors, not just healthcare, but other sectors as well, are in the middle of the country, not on the coast. And so that's going to create a unique opportunity for the people that are really focusing on this. And the reason I wrote my book and the reason you wrote your book was really to shine a spotlight on some of the companies that were being built and some of the cities that were on the rise, and encourage more people to pay attention, not just to entrepreneurship on the coast, but also entrepreneurship in the middle of the country.
Oh, yeah. I mean, the large corporations are there, the large universities are there, the talent is coming back, partly because of the pandemic and remote working. It's possible to work anywhere today. You don't have to go into an office. Then you see these tech clusters forming in these cities, in many inland cities. Downtowns, parts of the cities, which were pretty much devastated when the industry and businesses moved out, like in Dayton and Detroit and Flint and Cleveland. They were really hit hard. So tech could be the great boost that this region needs. And not just that region, but throughout the whole country, not just the coast, but not just Boston, New York, Silicon Valley, which we both know 75% of the money goes there, the venture capital goes to those 3 hubs, but it is spreading out. So I think the Heartland does have this opportunity to rise up. But on the other hand, I think there are a lot of challenges as well. The talent pool is one thing. It has increased a lot, But I think there's a real talent shortage. There's just not enough people readily available who are trained for technology. So that's one issue. I mean, what are some of the issues that you see?
No, I agree with that. I think the talent piece has been a challenge, both in terms of getting started and particularly scaling. When the companies in some of these rising cities really started, going from dozens of people to hundreds of people, sometimes even thousands of people, the people that had the experience managing that kind of growth were hard to come by in many of these cities. I think, again, the pandemic has been helpful there. I hate to say it because the pandemic has been tragic in so many respects, but if you're looking for a silver lining, some people did decide to move back to these cities, but perhaps more importantly, because of now the ability to work remotely, which more and more companies have embraced, some of that talent that understands sort of kind of hyper growth can be accessed even if they don't live in your city. And you're seeing more of the startups in these rising cities tapping into talent in other cities to bring in some of those specialized skills. So the talent piece is important. As you said, the capital piece is important. We're starting to see more venture capital in more of these cities. We did a joint report with PitchBook about a year ago that said there are 1,400 new venture firms that started in Rise of the Rest cities, outside of San Francisco, outside of New York, outside of Boston, just in the last decade, which I think is remarkable and bodes well for the future. And the other area that's a challenge, but we're seeing good progress on it, is within these communities. I'm sure you've seen it in the communities when you've been doing research on the book. They tend to be a little more fragmented, and they need to be more integrated and more collaborative, and they still tend to be a little too risk averse and not leaning into the opportunities. And when they, that's one of the great things about Silicon Valley. When you in Silicon Valley and you hear an entrepreneur making a pitch, you kind of say, wow, that's interesting. How big could that be? A lot of people, a lot of parts of the country are a little bit more skeptical and cynical and kind of focus on what might go wrong as opposed to what might go right. And of course, you have to, as investors, assess some of the risk factors. You have to do your diligence, but having a little bit more of that sense of possibility and even wonder is something that we're starting to see in more of the rising cities. So that bodes well. So if we keep working on the talent piece, we keep working on the capital piece, we keep working on this culture community piece, I think we'll see a real acceleration in the next 10 or 20 years.
Yes, I think that culture piece is really important because, people can get pushback from their own family. Why are you leaving this great corporate job and wanting to do a startup? It's a huge risk. Most of them fail. So
I got that myself. My first job actually was for a big company, Procter and Gamble. My second job, another big company, PepsiCo. And then I went to the startup sector. The first startup I joined failed. So, my parents were quite concerned about my career trajectory. And even during the first decade of AOL, it was really a struggle. There were a couple of times we had to go through layoffs and it didn't look like we were going to run out of money. And finally, we obviously were able to kind of power through and ultimately it was a big success. But there were some dark days there. And that is where you have to really have the perseverance, the resilience to keep fighting.
Oh, that's great experience that you can offer to the entrepreneur today. And is there anything that you would do differently in your career?
Of course, there are things I do differently. Almost at every stage of my career. In the early days of AOL, we started in 1985. Only 3% of people were online. They're only online an hour a week, so it was super early. I thought it was obvious that the internet would eventually be mainstream, but it really took 10 years for it to be mainstream. And I think figuring out other ways to accelerate the growth. I wish we'd be able to grow it faster. And then when things really took off, we saw a dramatic acceleration. I remember the numbers when we went public in 1992, we had less than 200,000 customers. And 10 years later, we had something like 25 million customers. So the first 10 years were slow. The next 10 years were fast. And there we had challenges in managing some of that hyper growth. We had 10,000 employees. At one point, we had the whole system crash because we couldn't handle enough of the connection. So there are a bunch of things some things that went right, but many things that went wrong. And as I learned as an entrepreneur, you have to keep fighting. And in these places, in the Silicon Heartland, in these Rise the Rest cities, have to fight a little extra hard because the challenges they're dealing with are even greater than the challenges of entrepreneurs in places like Silicon Valley.
Right. So do you see an AOL type company coming forth from the Heartland?
Well, I don't know what exactly in these days an AOL type company would be, but absolutely I believe.
But I mean, in terms of the growth.
No, absolutely.
And the impact.
We've seen that, and we'll see more of those in the coming years. Companies that that just kind of come out of nowhere and surprise people. One that you mentioned, Detroit, one of the companies we backed probably 6 years ago, when I was just 2 or 3 people, is a company called StockX. Now it's over 1,000 people in Detroit. So there's examples now really all across the country. I wrote about a lot of them in the book, of companies that really were ideas and suddenly are real companies with multi-billion-dollar valuations and hundreds, sometimes even thousands of employees, in cities that would surprise people. And when when the Rise Risk book came out in September, I was doing the book tour you're doing now. The most common question I got was, okay, I kind of understand what you're saying about the rise of the rest. I kind of understand this idea of dispersion of talent and capital. I kind of understand that maybe Silicon Valley has been a little too dominant, and over time it will, other cities will rise up. What are the 1 or 2 cities that really are on the move? And I had to remind people that the whole reason I wrote the book, the whole reason you wrote your book, is it's not 1 or 2 cities. It's several dozen cities that are showing remarkable momentum. And I think this really is a moment in time. And even some of the government decisions, including what was done last summer with the CHIPS and Science Act, and now rolling out significant investments to support regional hubs, not just in semiconductors, but in other sectors as well. There's something happening here that is really going to, I think, have a transformative impact on our economy and our country. And most people are just not paying attention to it. So thank you for writing your book and helping to spotlight and champion these entrepreneurs and this idea of more capital backing more entrepreneurs in more places, and therefore more companies starting and scaling and more jobs being created.
Right. No, I agree. I mean, I was writing my book was a bit of a homecoming for me, because I'm originally from the Heartland, and just going back and doing all this research, grassroots research and interviews firsthand, I learned a lot. And I found that it's Pittsburgh, Columbus, Indianapolis are all booming, and they're booming in their own unique ways. And each one of these regions or cities has its cluster of innovation. So it's all very specialized. And the other thing that was kind of remarkable to me is kind of easy to drive from one place to the other. Well, it didn't take long to go from one place to the other, because when you think about the Heartland, you think, oh, it's, going coast to coast, it's how many miles? 2,500 miles.
Right.
It'll take forever. But, driving from Detroit back to my hometown area of Lancaster took 4 hours. Oh, and I wanted to mention, too, that the new Intel plant outside of Columbus is only 30 miles from my hometown.
Wow.
Lancaster. Yeah. So, yeah, it's that whole region is going to boom. And
well, I think one of the interesting things about your career, and even the other books you've written, is 10 or 15 years ago, you were, writing quite actively around China, the rise of China, and how it was really creating, changing the dynamics in terms of global competition. And obviously that continues to be the case. But I think it's interesting that after, spending so much time focused on that, you kind of refocused, pivoted, if you will, to focus on America, and particularly focus on the Heartland, saying that's suddenly now emerging as an opportunity, but it's not an opportunity that's well understood. I think that's part of the broader dynamic. We're definitely having, we're seeing global competition around innovation, entrepreneurship, a globalization of venture capital, a bunch of factors happening. So places like China obviously are important to keep an eye on. But it's also important to keep an eye on what's happening within this country and celebrate what's happening in this country and try to stimulate more of that success in different parts of this country.
Yeah, and we are seeing this Build Back Better plan taking shape and really having an impact in the Heartland of infrastructure, where we saw the train crash in Ohio, and another train crash in Ohio right after that. And so we know our bridges, our airports, our rail system all needs to be upgraded. Our inner cities need to be upgraded. There's a lot of work to be done to build up our country. And look, I was in China in the early days, and I saw it develop very quickly. So I've been able to spot some of these similar trends in the Heartland, although it's much more gradual in the Heartland than it was in China. In China, it was a terrific boom. And the Heartland hasn't had that boom, but it is gradual, and I do see the shift happening, which I know you recognize as well. Okay, so look, let me see some questions over here. There's a question here about founders and their expectations, and whether they have unrealistic expectations about valuations and about how fast they can grow. So Steve, from your wear your entrepreneurial hat, and what do you think? And your venture capital hat. And so what do you think?
Well, it kind of depends on what you're trying to accomplish in the stage of the company. It's always hard to raise capital to start. Yeah, well, I guess almost 40 years ago, we were only able to raise $1 million to launch the company. It was hard. So I understand the challenges. It's got a little bit easier, but it's still hard, particularly in these rise of the rest, cities. I think what's happening in the last couple of years, you've seen much more of a correction, and it's to be expected in the later stage private market, sort of those growth rounds, maybe 3 or 4 years before companies go public. And that's predictable because when the public markets drop in half, it forces the private markets with the comparables of different sectors to also kind of drop significantly. You've seen some of that also at the venture stage. You've seen a little less of that at the seed stage, because the valuations there always were relatively low compared to the later stage round. So that's the obvious thing that's happened. So yes, it's more difficult to raise capital. Yes, sometimes there's a disconnect between what the entrepreneurs think the company should be valued at and what the investors are willing to invest at, and that takes some time to settle out. And we're in that settling process right now. But if you are an entrepreneur, you're building a company you really believe in, I think it is, and you need a certain amount of capital you believe to build a team or handle the marketing, whatever it might be. I think it is important to raise that capital, even if it's on terms that you don't particularly like, because it's better to own a little less of a company that ends up being really successful than more of a company that ends up struggling or missing out on the opportunity. So I know it's not advice entrepreneurs want to hear, because they'd rather be able to raise capital on more favorable terms. But I think the reality in the market we're in right now, you either should figure out ways to make whatever capital you have last longer in terms of your runway, or figure out other ways to kind of bootstrap it. Maybe some of your customers can make long-term commitments and pay in advance to provide some capital. But if you need to access venture capital, you just have to realize that there has been a reset in the market overall at every stage, and that will result in valuations being lower now than they were a couple of years ago.
Okay, how long do you think that's going to last? A year?
Probably a year or two. It's going to take some time. For example, these cycles take a little while to play out. 2 years ago, the IPO market was quite robust, really all-time highs in terms of companies going public. Last year, it's been pretty dead. What's called the IPO window has essentially been shut. So companies that normally would be going public now are not going public now. Eventually, that will open up, and it kind of depends on what happens more broadly in the economy. But a lot of the bankers think it'll probably be later this year, maybe early next year, when that IPO window opens up, and then some of those late stage companies will be able to go public, and that will start. Those valuations will kind of be of those newly public companies will set an interesting mark that some of the private companies will then be valued based on. So I'm guessing over the next year or two, it'll get a little bit easier. It's never easy, but it'll get a little bit easier to raise capital. Valuation will likely be a little bit higher. Most of the venture capital investors that we talk to and we work with are being careful now. They're focusing mostly on their existing portfolio. They're being pretty selective on making new investments. But the general view is the investments made in the next year or two likely are going to turn out pretty well in terms of the ultimate returns, better than the investments made 2 years ago when the market, in retrospect, was at kind of an all-time high.
Yeah. Well, you were instrumental in getting the Jobs Act passed, which opened up a lot of capital and IPO avenues for startups. And that was a major impact, I think, and crowdfunding, opening up crowdfunding. So today, we need more of that venture capital in the heartland to boost the economic growth of some of these startups. They're struggling to start up and get to the next level. So what do you see as a solution for the heartland in getting more venture capital in there? I know some coastal VCs have caught on to the heartland's potential, but what do you see as kind of the turning point here?
I do think things like crowdfunding can be helpful, but I think the most helpful is having more local regional venture firms. And that's why, as I mentioned before, the fact that 1,400 new firms have started in the last decade in rising cities, I think bodes well for the future. I mean, having that initial capital that you raise coming from kind of some people in your region, I think makes a lot of sense. And then as the companies scale, and the size of the rounds tends to increase. That's when you're tending to get the interest of coastal kind of venture capitalists. So it's happening. I think it will accelerate in the next decade because of some of the dynamics that we've talked about.
Right. So are you advising the current administration on startup and innovation policy?
I am. You had mentioned in the intro that I was the co-chair of the National Advisory Council on Innovation and Entrepreneurship 12 or 13 years ago when it was first started. Yeah, I'm again the co-chair of that, and we've been having a number of meetings focusing on the kind of industry of the future. A lot of focus on regional hubs, given the legislation that passed last summer, and given the greater interest in this. So I'm back in the game of trying to be a voice of championing entrepreneurs and doing it in a more inclusive way, bringing more people and more places along.
Right. Yeah. So one of the interesting aspects of your funds is that you're investing so much in minority entrepreneurs, women and Blacks, and it's really about 40% of your portfolio is in these areas.
Yeah,
I think that's remarkable, really. I mean, because if you look at the percentage going to minority entrepreneurs today, it's tiny compared to
it's tiny, and even our numbers. Thank you for saying that. Yeah, still aren't what they should be. They're better than others are, but still not what they should be. So our initial focus when we got going with Rise and Rest now nearly a decade ago, actually a little bit before that, when I was asked by President Obama to chair Startup America, that really was about place, exactly the things we're talking about. Yeah. But as we started this journey trying to understand what's happening in these rising cities, it quickly became apparent that there wasn't just a problem in terms of venture capital only going to a few places. There was also a problem of venture capital only going to certain groups of people.
Right.
The other thing we noticed is some of the cities that we were visiting tended to be more diverse. And as a result, we were able to identify promising entrepreneurs in many of these Rise and Rest cities that were more diverse. And so some of that was by intentionality. When we come to town and do pitch competitions, we try to make sure the people on the stage reflect the community that we're in. But there's still a lot of work to be done, not just at our firm, but across the whole industry to level the playing field even more in terms of people.
So you think this regional innovation, the whole frontiers, new frontiers, regional innovation hubs is an answer?
It's part of the answer. Obviously, it's not the entire answer, but I think if you are more, it starts with trying to expand your aperture in terms of what, as an investor, you're looking at. And if you're historically sitting in, say, Silicon Valley on Sand Hill Road, and you, I don't know, went to Stanford, then you worked for a few years at Google, and now you're at a venture capital firm, the tendency was to back people in that area that you kind of knew. Or knew somebody who knew them. So it was a pretty tight, kind of insular group.
Right.
If you have to expand that aperture, I think, and not just be backing entrepreneurs where you happen to live, but also backing entrepreneurs in other places, and not just backing entrepreneurs that look like you or had similar backgrounds, but be looking for other people with different backgrounds. The reason that's so important, as you know, is entrepreneur at the core. Entrepreneurs see a problem and decide to do something about it, and they start a company. Well, guess what? If you're living in San Francisco, you see different problems than if you're living in Kansas or some other part of the country. And if you're living in a big urban area, it's different than if it's suburban, which is different than if it's more rural. And certain cities have certain expertise. I remember we were in Chattanooga, Tennessee, when a company that won our pitch competition was doing a kind of like a Bloomberg data system for the trucking industry. And I didn't know this till we were there, but most of the big trucking companies in America are headquartered in Chattanooga. So of course that's the logical place for that company, to be. It just requires expanding that aperture. The other story I love is there's a entrepreneur, Carter Malloy, who was in San Francisco working for a hedge fund and had the idea for a investment platform called Acre Trader that we backed with our Rise and Rest fund. And basically Acre Trader allows you to invest in farmland. And he said, if I'm going to create a platform to invest in farmland, the first step is getting farmers to want to work with me, to trust me. And I'm going to have more success if I'm where the farmers are. So he moved to Fayetteville, Arkansas. An acre trader is based in Fayetteville, Arkansas. It's scaled quite nicely. It's raised, I think, upwards of $100 million now of venture capital in Fayetteville, because the problem they were trying to solve was, better solved in their view in Arkansas as opposed to in California. We're seeing more and more of those stories. I'm sure as you did your tour and wrote your book, you also saw more and more of those stories that are reasons why people are in these cities. Not just the ones that people focus on, cost of living. Yes, it's lower in other cities, and commutes. Yes, they're shorter in other cities, and there are many lifestyle benefits in these other cities. That's all true. But the more strategic reason we're going to see an acceleration in these rising cities is some of these cities have strategic advantages in some of the industries that are going to get disrupted in the next 10 or 20 years.
Right. And the lifestyles are getting better in some of these cities too. More restaurants, more entertainment. Certainly the lower cost of living is an attraction, but the cities themselves are, really becoming much more, a place you want to live, right? And that's one of the reasons they're attracting this talent.
And one of the great stories I wrote about in my book is the woman who writes the term sheet column for Fortune magazine.
Oh yeah,
which covers venture capital. Jessica Matthews was in New York City, but at the beginning of the pandemic moved with her sister to Bentonville, Arkansas, Northwest Arkansas. And because he thought there was some interesting things with restaurants and bike trails and so forth. So now this newsletter covering venture capital, covering Silicon Valley, is written from Arkansas, which I think is a sign that things are changing.
Oh yeah, definitely. Yeah. Those are some good stories. So I think we answered Brian's question there. He wanted to know about an extraordinary deal story. Is there any other deal story that stands out?
Well, with our Rise Rest fund, we've now made 200 investments in 100 different cities across a lot of different sectors. So picking out just a few is a little bit like picking out your favorite child, or now favorite grandchild. So I mentioned some. Another one I love in Atlanta, I was just with the guy who runs Georgia Tech a few days ago. We were talking about it. There's a company called Hermeus that's basically building a Mach 5 engine, so you can get from like Atlanta to Europe in 90 minutes. And guess what? The Air Force likes to move stuff fast. So they're actually a big customer. I think they've done like a $60-70 million contract with this company. And this company, Hermeus, is in Atlanta, which is not the obvious place people would think a tech company like that focused on aerospace would be. But the reason they're there is partly Atlanta actually is a key aerospace hub. And Georgia Tech is a terrific university with a particular expertise in that particular sector. So again, for Hermeus, it was the best place to be, not Silicon Valley or not some other city. Atlanta was the place to be. So it's those stories where these companies are really scaling remarkably well in cities that might surprise people, but if they dig in and understand it, and by reading your book, they'll better understand it. They'll see why those companies are based there, and see why they're having success there, and see why those cities are poised for more growth in this next decade.
Well, you're making me think of Dayton, where I actually started as an intern on the Dayton morning newspaper way back. Anyhow, I went back to Dayton when I was doing my Heartland research, and I discovered all the companies that are spinning out of the Air Force Research Laboratory in Dayton, and so many of them have these military applications, and they're doing well because they're getting government contracts, and the military is expanding, so it's good business. So lots of stories there in places you wouldn't expect, although Dayton was always kind of an inventive place.
It's a great history of invention, but this lost some of its, Montreal mojo, which was true with many other cities. The first city we visited on our first Rise the Rest tour almost a decade ago was Detroit, which you mentioned earlier. 100 years ago, Detroit was the most innovative city in America, sort of the Silicon Valley of its time, because the car was the technology, and then kind of start struggling, actually went bankrupt, but now is fighting its way back because of what the startups are doing in that area. And the other one I remember, my first job out of college was in Cincinnati, Ohio, so not too far for you. from you. And at the time, as the downtown area of Cincinnati was dead, like many downtowns and many, now it's bustling. And there's one part of Cincinnati called Over the Rhine that was kind of a dangerous neighborhood.
Yeah.
Now it's called OTR, and it's the hottest neighborhood in Cincinnati. So it went from a dead downtown with a scary neighborhood to a hot downtown with a lot of the entrepreneurs now are choosing to be an OTR. 40 years ago, very few people chose to be there. It just shows you what's possible as these cities kind of reimagine themselves, and when entrepreneurs are there building companies that are starting to create jobs and drive opportunity.
Yeah, no, I stayed in that Over the Rhine area during COVID when I was doing my research for the book. And actually, I'm going back again in a few weeks. So I think it'll be a much different picture than it was during COVID. And I'm looking forward to that.
I think it'll be bustling now. During COVID, I'm sure like most places, it was, kind of a lot of things were closed down. But OTR is definitely on the move.
Yeah, well, a great thing about doing my interviews, most of my interviews during COVID, is that almost everybody was available. You were available too, Steve. I interviewed you for my book.
I remember that. I guess that is the advantage. And even when I was thinking about writing this book on Rise of the Rest for several years, but it was in that first year of the pandemic where my wife Jean said, "You really have to write this. This is a story that needs to be told, and you can't say you don't have time because you do." And so,
you're not traveling.
Exactly. Well, you're saving a lot of time by not being on planes. So, why don't you seize the moment? And that led to writing the book.
Yeah, no, that's good. So Hal Kelman has a question from your Washington, D.C. base. There's lots of private cybersecurity companies with the NSA theme there. So is that an area of focus for you?
Yeah, no, it's a very hot area. And the Washington, D.C. area more broadly, I think it goes back to some of what we've discussed in terms of the fact that government's based there, and NSA, CIA, a lot of really significant intelligence operations are based there. You're seeing a lot of momentum in the cyberspace. The other thing that's really remarkable, again, thinking back to my early days with AOL in the mid 80s, Northern Virginia was not about startups. It really was about big government, contractors and law firms and things like that. When we raised money for AOL, none of the venture capital came from the DC, Virginia area. All of it came from other cities. But now the area is really showing pretty good momentum. And it's remarkable that a few years ago, Amazon picked that area for its second headquarters. Now there's 8,000 employees in Northern Virginia. That was inconceivable, 20, 30, 40 years ago. So it just shows you what's possible with these rising cities.
Oh, yeah, definitely. So a related question. Okay, from Mike Green, he's in West Virginia. Hi, Mike. Your DNA has led you to invest a lot in tech and IT. What are your thoughts about other sectors like life sciences or ag tech and others? And somehow you miss West Virginia, he's saying, on your tour, on your bus tours. But he said, we too are in the heartland with a lot of deal flow. Come see us. Welcome home, country roads.
I know a lot about West Virginia, been there many times and chat frequently with Senator Manchin, and also know some of the people that are really trying to lead the charge in terms of more tech in West Virginia, including John Chambers, who's based in Silicon Valley, used to run Cisco and has a real heart for West Virginia. And the former CEO of Intuit is now running one of the major universities in West Virginia, and so we're seeing a lot of momentum in West Virginia, and we are definitely looking for opportunities to visit and opportunities to invest in West Virginia, and obviously all over the country. Really believe this rise to rest phenomenon is a much more broad-based phenomenon.
Sure. Oh, I agree. Yeah. And so I'll be going back to Appalachia on my Rust Belt Road Tour. March 30th is Morgantown. So I'll be there. Okay.
And then just the last part of that question, I didn't answer is there are some sectors like ag tech and other things we are investors in. So when we think about tech, we think about it broadly. And it goes back to what I said before. In some ways, every company is now a tech company. And in many ways, the internet's now meeting the real world and really reimagining some big important aspects of our lives and also really big industries. So that's really been where our focus is.
Sure. Okay. So Peter Mullen is chiming in from Tulsa, Oklahoma, and he wants to know, when are you coming back to Tulsa? COVID canceled some of your bus tours, so I think maybe Tulsa.
Yeah, I love Tulsa. We've done a lot of work with George Kaiser and the Kaiser Foundation, and visited several times. And as you were suggesting, we did plan our 9th bus tour was gonna. This was, I guess, it's almost about 3 years ago. It was the kind of early days of the pandemic. We were going to be in Tulsa, Oklahoma City, Wichita, St. Louis, and we just had to obviously cancel it. And then we rescheduled it and had to cancel it again. So
Oh, boy.
we'll get back at some point. But we decided in the last few months to focus on the Rise to Rest book coming out and doing book tour related to that. But we look
Yeah.
forward to kind of hitting the ground again, and look forward to being in Tulsa soon.
Oh, yeah. Well, you're in demand for sure. So the way it works is you actually hold pitch competitions in these cities when you come in, right?
Yeah, it's a little more than that. When we decided to do on these bus tours, we plan which cities to visit, and I think we visited down nearly 50 cities.
Yeah.
And we're using the bus to get around the town, see what's happening and different things. Use the bus to introduce people, including people within that city, but also people who join us from other cities, and so they see what's happening. Visit some of the more successful startups. Usually visit the university. Usually, do something with the
Yeah.
mayor or other people. So a lot of things that are happening through the day, but we end the day with a pitch competition and sort of a
Okay.
party, a celebration. So
Yes.
every city has a pitch competition as part of it, but that's really more just a really small part of it. It gets most of the attention, but what we're doing the rest of the day actually has, I think, more impact.
Okay. There's a few more questions about your specific investments, and there's a question about whether you foresee opportunities in biotech and health sciences, big data, given the requirements for privacy under HIPAA. What do you think about that area?
Yeah, we are investors in that area. One of the companies we backed, a company in Chicago called Tempus, is just started up 6 or 7 years ago. It's really scaled quite significantly now, over 1,000 employees. They've raised nearly $1 billion of capital, really doing a major push using essentially big data and a whole host of technologies to more precisely diagnose disease so that doctors can have a more precise treatment for disease. And this was inspired by the founder, Eric Lefkowski's wife, was diagnosed with breast cancer about seven years ago. And they talked to different doctors and got different opinions, and he said, "This is crazy. This shouldn't be so random," and started a company to make it more precise. So that's an example of a company that has scaled quite significantly. We're super proud of.
Yeah, in the heartland in the Midwest, there's awful lot of investment going into healthcare tech, and that's an area that's booming.
And it goes back to the cities we were talking about. Some of this connection with partnerships and expertise in some of these sectors. It's not surprisingly, there are a lot of startups in Ohio around the Cleveland Clinic, a lot of startups in Baltimore around Johns Hopkins, a lot of startups in Texas around MD Anderson, and in Minnesota around Mayo Clinic. These are very prestigious kind of research hospitals. And when they work with you and adopt your technology, that kind of credentials you, and you're able then to sell that to other folks. And so that's one of the reasons why you're starting to see more startups building around some of these anchor companies, not just in healthcare, but in other sectors of the economy as well.
Yeah, definitely. Like insurance in Columbus,
Right.
healthcare, biotech in Cleveland, mobility in Detroit,
Exactly.
SaaS in Indianapolis, AI in Pittsburgh because of Carnegie Mellon and robotics. So another question here about healthcare, investments in healthcare and cancer research. So what do you have to say about that kind of
I think
investment?
it's a big opportunity. I mentioned Tempest, which is doing things related to data and cancer, but more broadly, you just start with the reality that it's one of the most important aspects of our lives. The healthcare system doesn't work all that well. Having innovations that result in more convenience, lower costs, and better outcomes could transform an industry that's 1/6 of the economy. So it's this massive industry that needs to be reimagined, and the entrepreneurs are going to be on the front lines of reimagining it. But those entrepreneurs are going to need to partner with other companies and other organizations, hospitals, and others to really get the systems level innovation that's necessary there. So I think every sector of the economy is up for grabs. And what's nice about what you're writing about with Silicon Heartland and what we've been writing about with Rise to Rest us is the story is shifting, and instead of just assuming that disruption, that innovation was going to happen on the coast, particularly in places like Silicon Valley, now we're seeing it happen all across the country, and that will continue to develop over the next decade. I think most people 10 years from now will be surprised by how much is happening in these rising cities.
Yeah, I agree. In some of the book talks I've given, they've asked me, oh, how long do you think it'll be before this region, reaches a tipping point and really does stand on its own? And I said a decade, but you just said right now 10 years. So
But yeah, 10 years or sometimes more. I mean, these things don't happen overnight. The momentum begets momentum. You've seen some recent successes. You mentioned Indianapolis, a success with Exact Target and Salesforce now having 2,000 employees there has kickstarted a focus around enterprise software. Now several dozen companies there. That's happened relatively recently. But if you look at some of the cities that are really strong now, like Austin or Seattle, that was really over 30 or 40 years that the things were, the seeds were planted much earlier. In the case of Austin, some of the work around semiconductors, Semitech, obviously the success of Dell, and then the popularity of the South by Festival, that all kind of came together to really create Austin, kind of momentum around Austin. Seattle was struggling 40, 50 years ago, really struggling. The industries that were dominating Seattle were in decline, but suddenly it's now a tech hub because the two Microsoft founders, Bill Gates and Paul Allen, were from Seattle, wanted to go home, and also Jeff Bezos moved from New York to Seattle to start Amazon there to pick off some engineers from Microsoft, and the success of those companies and others, suddenly Seattle's got a lot of momentum. But that goes back to, again, 30 or 40 years. So I think we have to be patient here and recognize that it's sort of like trees. You plant the seeds, eventually they grow. It's pretty hard to get them to grow overnight.
yeah, I think the region needs more heroes like you in the region, right? People who made it and stayed there, and they can be a model for other entrepreneurs coming up. They can say, look what he did. I can do that too, maybe. And then that becomes, a career path for them.
I think that is important. Seeing that somebody has really been able to build a significant company in one of these cities that most people, even people living there, didn't think it was really possible, is important. And then, as I said before, some of the people that were part of that company have skills and often made some money on stock options and can start their own things or invest in other companies. And we saw that with AOL. It went from very difficult to raise capital. There are very few startups in that Northern Virginia area to suddenly more than 100 companies came out of AOL, and some of them ended up being quite successful. So it's that momentum begets momentum dynamic that we need to trigger in more and more cities.
Yeah, definitely. Well, that's great. So look, any other questions, you can put them in the chat box. Now's your chance, because we're going to be wrapping things up pretty soon. And I want to make sure we get all the questions answered. Steve, what else is on your mind? What's your next big project?
Well, I think we've been at this for a decade with Rise of Rest. I think we still have a lot of work to do. It reminds me a little bit of those early days of the internet that I mentioned. The first decade, hard to get people to attention. The second decade, we saw a real acceleration. I think that's going to happen here. The last decade was a lot of the foundational work around Rise of the Rest. I think the next decade there'll be an acceleration, so there's a lot of focus on that. And also, we do believe that some of the big investment opportunities in this next 10 or 20 years are going to have this intersection of innovation with technology, but also innovation around policy. And so engaging with the governments in this country and around the world, I think will be also a way to unlock some interesting opportunities. So for Revolution, we're kind of focused on place and focused on policy as sort of our core areas of focus. I think they both have a lot of opportunity and and a lot of momentum you'll see in the next 10
Right. With J.D. Vance now as the U.S. Ohio senator, that could be a real plus for the Heartland, right? And he was with Revolution, Rise of the Rest, your funds. Before.
Yes, he was in Silicon Valley, and then he moved to Washington, D.C., which is where we're headquartered. His wife, Usha, actually was a clerk at the Supreme Court for a year. And so they were living in Washington, D.C., and he helped launch our first Rise of the Rest fund, then moved back to Ohio and launched his own fund probably 3 or 4 years ago, and then ran for Senate. So hopefully he'll bring not just the voice of Ohio, but the voice of entrepreneurship to the Senate.
Oh, yeah. Well, he certainly is making waves already, being out there in East Palestine, Ohio, and wading the creek. Okay, so I'm going to be, okay, please share a little bit more about policy that will help drive economic activity and tech startups in the US. We talked a little bit about that with the regional innovation hubs, but what else, Steve?
Well, I think the regional innovation hubs are important, and there's going to be a lot of emphasis on that in the coming months. And so watch for some more and more things coming out of the Commerce Department, other parts of government talking about regional hubs. But more broadly, it goes back to some of the things we did talk about in terms of the legislation that passed in the summer, the Chips and Science Act, the Infrastructure Act, the Inflation Reduction Act. Really is going to lead to a significant investment in decarbonization, reshoring. A lot of important industries are going to get kind of new levels of investment. And if you look back in history, some of the things, including the internet, were really only possible because of government investment. That's really the DARPA investment 50 plus years ago that the government made, really created the internet. So the investments made in the 60s around space technologies create a lot of technologies that we now take for granted, GPS and other kinds of things. So I think we should pay attention to what's happening and recognize that there's going to be a real significant increase in investment in basic R&D across a number of technologies, across a number of industries that create quite significant opportunities for entrepreneurs. So looking at that policy kind of side of things, as well as the regional hub side of things, I think is a place to focus.
Yeah, and I see all this new investment that's going in, that's government funded R&D and regional hubs and the CHIPS and the Science Act, all of this as a counter to what China's own tech growth has been. So it's the other side of it, and the U.S. is, really escalating all of this investment activity.
It's game on. Again, you've been writing about this in China for almost 2 decades, but I think there's now a recognition that we are in a global competition around innovation, around entrepreneurship, with China in particular, obviously having a significant momentum, and that has led the Congress to take action, including the Chips and Science Act, in part based on some of the fears of that, how we were positioned around global competition. So I think it's interesting, as you well know, it's also interesting to see the model with China. It's so top down, and even recently, even more top down, where the leadership has really kind of cracked down on some iconic entrepreneurs. The difference in America is much more bottoms up, which is why what we're doing with the Rise of Rest and what you're talking about with your book is so important. It's not just decisions made in a few places. It's really lots of things that are done by lots of entrepreneurs in lots of places that sort of some of which end up turning into really significant companies. So both America and China want to win this next battle. The difference in terms of how they're approaching it couldn't be more different. I think it's important that we do everything we can to make sure our country wins, and the best way to do that is to keep backing more people, more innovators, more pioneers, more entrepreneurs who are doing bold things in different industries and doing it in places all across the country.
Oh, that's great. That's great. All right. Let me just share a few other remarks here and wrap things up. That was a wonderful ending point, Steve.
Thank you.
Yeah. And okay. Just a second here while we get our slides in here. All right. Well, the book is out finally. Yay. So everyone there, you can go out and order it on Amazon or Barnes & Noble. I am going to be out on the on tour, hitting Pittsburgh, Morgantown, Cincinnati, Purdue University, Cleveland, Carnegie Mellon, DC, Chicago, Lancaster, my hometown, and a couple other places too. So I hope you'll join us. And here's a little bit of where I'll be going and what I'm going to be driving, which is my Honda Element, which was with me on the tour of doing all the interviews. So it's still running, 80,000 miles. So please keep running Honda Element. And so good. Thank you for joining us today. There were a lot of good questions. Steve did handle them remarkably well, as I expected he would. And Steve, any last thoughts?
No, just congratulations again on the release of the book today. It's a terrific book. I urge people to pick it up and have a better sense of what's happening in the Silicon Heartland. And hopefully, as you travel around talking about that book, that will get more people to open their eyes to the opportunity that now exists all across the country. So thanks for taking so much time to write the book, and then taking a lot of time to promote the book, not just to sell books, which is part of it, but really to get those ideas in motion.
Yeah, well, my heart is in it. It's not just my brain, but I got a little bit of heart and soul in it as well. So I hope that came through in the book. So anyone reading it out there, please do a review. I would love that as well. So thank you, Steve. I loved your endorsement of the book, and thank you for being such a great guest. And look, I may see you on the trail, maybe
All
Cleveland.
right, look forward to it. Thanks, Rebecca. Thanks, everybody, for tuning in.
All
See you
right,
later.
bye now.